Welcome everyone to this presentation on private lending. My name is Bob Scott and I will be your host. I'm going to make the assumption here that folks listening are fairly new to the concept of private lending. That way I won't leave anything out. For those that are familiar, I'll be bringing in some good nuggets of information about our business model and how we structure our deals. Who am I and what makes me qualified to talk about real estate and private lending? Well, I graduated from the U.S. Air Force Academy with a degree in civil engineering. I spent 5 years on active duty. During that time, managed over $80 million of construction projects. We did everything from bollard installation to building police stations in Baghdad and runway maintenance. I rehabbed and flipped a handful of homes on the side while I was in the Air Force and knew that's what I wanted to do long term. After leaving the Air Force as a captain in 2011, I jumped into real estate full time. Since then, I've done over 100 transactions, everything from raw land, single family homes, multifamily apartment buildings, and commercial deals. I have experience using a wide variety of strategies, wholesaling, fix and flip, subject to, and lease options. And I currently have a portfolio of 56 properties and growing. Why should you be interested in real estate? America's on sale, folks. Warren Buffett said if he could figure out a way to load up on single family homes, he would. I'm buying houses at 30 to 50 cents on the dollar, and there's a lot of inventory. And I know folks all over the country doing the same. Foreign investors and hedge funds have been buying things up left and right. I know of one hedge fund who's buying 25 to 30 every single month just here in my town of St. Louis. I know because I used to sell properties to them. Most of the homes we put under contract now are bank-owned properties or short sales where people are underwater on their loans. We also buy other types of distressed sale situations. We use private money from private lenders to fund the deal, purchase the property, and do any needed renovations. Here are some examples of some recent deals. This one is a 3-bed, 1-bath, 1,586 square foot house. Between purchase and repairs, our total investment on this project was $40,000. We installed a lease option tenant buyer who put $4,000 down as a non-refundable option deposit and is paying $1,500 per month in rent. All repairs, maintenance, and utilities are the tenant's responsibility, and the tenant has an option price of $89,000. So overall, we purchased an investment for 44 cents on the dollar. Not counting debt service, we have a cash flow of $1,285 per month, which yields a cash-on-cash return of 42.8%. Here's another project we purchased for $30,000. Total value in today's market is $65,000. Tenant buyer put $3,000 down and is paying $900 a month. And this one yields a cash-on-cash return of 32.2%, and just at 46 cents on the dollar. Here's another one, investment of $40,000. The cash flow for this one is $793 a month with a ROI of 26.4%. This one was a 4-bed, 2.5-bath, 2,500 square foot house on over an acre of land that we picked up, and with repairs, we're in this project for $75,000. Total value from an appraisal that just came back is $150,000, so we're right at 50 cents on the dollar. And this one yields a cash flow of $1,240 per month, not counting any debt service. We have $75,000 of equity in this project. So let's get down to specifics. Who is a private lender? A private lender is an individual person like you or me who loans their money from their investment capital or their retirement account. Now the second bullet point is very important. In our program, we are not partners. The reason we don't do it that way is that we found in the past when you've got more than one boss, you've got too many cooks in the kitchen. Another reason is this protects our lenders from any and all liability when it comes to issues that come up with the property. Our lenders absolutely love the program. They get a definite, reliable return on their money without having to do any of the work, and they are sheltered from the majority of the risk. So in other words, the private lender does not go on title or in deed, but their investment is secured with a deed of trust, also known as a mortgage. This is a one-on-one transaction between you, the private lender, and myself as the real estate investor. So why would someone as a private lender be interested in this program? Number one is very simple, and that is as a private lender, you can earn 15 to 30 times as much as you can through traditional resources. Now let me clarify. I did not say 15% more, I said 15 times as much. And here's what I mean by that. Did you know that in the United States right now, the average certificate of deposit earns 0.27% for a 12-month CD? That's according to Bankrate.com's recent survey. That's 0.27%, folks. So for a real-world example, let's say we as a real estate investor come along and pay 7%. That's 28 times more than you can get through the average CD. So again, the number one reason a private lender is interested in working with a real estate investor or entrepreneur is because they can make so much more money. Number two, and it's a huge point, There's no volatility in the principal that you loan out to the real estate investor. Now, here's what I mean by that. The principal remains the same when the amount you loan out. So if you loan out $100,000, that principal is not being paid down in most of our private money program deals. The reason for that is our lenders want to keep their principal totally invested so they can keep earning as much interest as possible on that money. So most of the loans are interest only. The principal remains the same, and then you as the private lender get cashed out when the house sells or when we refinance it with traditional bank financing. So the reason my private lenders like this program is it's completely unlike the stock market. If you go buy a stock right now, you have to pay commission to the broker you bought the stock from, and right off the bat, your principal amount has already gone down. Sort of like a new car when it drives off the sales lot. It just lost value. If you go buy a stock right now for $20, 30 days from now, it could drop to $15 or even lower. With private lending, you don't ever have to worry about the principal fluctuating, and you get a reliable and certain return on that principal. And you know what kind of return you're going to get ahead of time. What our lenders absolutely love is that you're able to get your principal back anytime in case of emergency. So we may set up a term on the note for 2, 3, or 5 years, whatever it is, but we give all our lenders what's called a 90-day call option. Life and circumstances happen, so let's say we had a term set up for 3 years. We know up front the private lenders don't want their money back anytime soon because they stop earning money on it. But if an emergency comes up and a private lender needs their money back, all they have to do is give a 90-day notice to get their money back. Now you might ask, where is the investor going to come up with the money to pay you back? Well, there are 3 primary sources. We have new private lenders coming to our program all the time. We have other homes cashing out, and we also work with traditional sources of funding. Sometimes we can even do it faster than 90 days. The 4th reason lenders love our program is because your money is safe and secure. You as the investor are going to get a deed of trust to secure the investment you've given out. This is a lien that is recorded on the county records, and we cannot sell or refinance the property without you being paid back first. So how can we afford to pay such high rates of return? We have a huge spread in these deals, so obviously with more money to make on our end, we can pass on more to our private lenders. Number 2, there's no middle person involved like with a hard money lender or bank, which has huge staff and overhead, and they nickel and dime you to death with origination and other junk fees. With our unique business model, we were able to sell at full appraisal price. Most times we are selling on a lease with option to purchase, so our buyers are not price sensitive and not negotiating with us on price. They are more concerned with the down payment and monthly payment. Last point is we are able to get properties occupied very, very quickly, even in a so-called buyer's market. We receive over 100 calls per day from potential buyers, so we are able to get these properties occupied quickly, and that in return reduces our holding costs. So for all these reasons combined, that's why we can offer high rates of return to our private lenders. Now let's look at the other side of the coin. Why would I, as a real estate investor, want to work with private lenders versus a traditional source like the bank or getting a home equity line? Here are a few reasons why we prefer to do business with private lenders. Number 1, most importantly, we can fund a deal a lot quicker with a private lender. Right now, funding a deal through a bank can take anywhere from 30 to 60 days. The best deals go quickly, and we have to be able to move lightning quick when they come up. In our world, we have a private lenders pledge X number of dollars, and it's on the shelf, ready to go. Then we put our system to work to go find the right investments immediately. We're able to put their money to work quickly, and we're able to close these deals in 10 days or less, sometimes as quickly as 48 hours, because there's just not that much paperwork involved, and we don't have to wait on the bank hierarchy and having to wait for the deal to go through a committee. We can do an unlimited number of deals with private lenders. There's only so much capital you can get from lines of credit, and if our business relied solely on them or other traditional sources, we'd have a cap on how many deals we could do. With private lending, we can do as many as we want. Most of the sellers we work with are motivated for one reason or another, and when we can offer a quick cash closing, that makes our offer stand out against the crowd, and we can get more profitable deals accepted. Now here are a couple sources for you as a private lender to be able to come up with capital to use right now for high rates of return investing in private lending. The average CD pays less than 1/3% these days. So obviously if you have any money here, you're going to want to get out as soon as possible and into another non-volatile area where you can earn a high rate of return. Money markets, bonds, saving accounts, IRA and retirement accounts are very interesting, and I'm going to go into some more detail on those in the next slide. I'm also going to give more detail on home equity lines and stock brokerage accounts. Very few people know that they can self-direct their retirement account and put their money to work in some very cool investment vehicles. Things that the brokerage houses don't offer because they don't make a commission on them. You can use it to purchase real estate, tax liens, private lending, purchasing notes, private placements, precious metals, and more. Equity Trust is the company I recommend, and their contact info is listed here. So here's how it would work. Say you or someone you know has an old 401k or current retirement account out of a brokerage house. Then you can roll over your account to these folks. And this rollover does not trigger a tax consequence. What this does is free you up to invest into these other vehicles. It takes about 2 weeks to get set up, and after that, you can start earning these high rates of return tax-free. And these folks know what they're doing. They manage over $100 billion and have many private lenders. I also mentioned home equity lines of credit earlier. Who has the biggest buildings in the United States? The banks do. And how do they do it? Banks borrow money they get from you as a depositor or the Fed at one rate and then turn right around and loan it out at a higher rate, and they pocket the spread. So when you become a private lender, you're cutting out the middleman and keeping more for yourself. Now, what if you could turn the tables on the bank? So let's say you've got a home or other property with equity just sitting there. You can get a line of credit around 3.5% to 4% these days and turn around and lend out at a higher rate and pocket the spread, exactly like the bank. I mentioned earlier you can use capital currently in stocks by selling them, and then you don't have to worry about the volatility. You don't have to think about what happens when another October 2008 rolls around. Stocks can't go up forever. It's just a matter of time until it happens again. In my opinion, it's going to be sooner rather than later. If you don't want to sell, you can borrow against your stocks on margin. So if you're interested in this, you call up your brokerage and ask them what the margin rate of return is. Depending on where that rate is, you turn around and lend it out as a private lender, and again, you're pocketing the spread. So let's talk a little more specifics. Loan to value. We want to be protected as an investor, and we want you as a lender to be protected. That's why we don't go over 75% loan to value in our projects. That means if we have a house worth $100,000, we won't have the lender loan more than 75% on it. That way, there is always a lot of equity, so in case there's some kind of correction in the market, we still have some equity and room to work. Even if values come down a bit, then everybody's well protected and safe and secure. Interest rate, term, and payment structure will vary depending on your goals as a private lender. We'd want to have a follow-up call and figure out exactly what your needs are and then go find an appropriate project for them. As I mentioned earlier with the 90-day call option, in case any type of emergency comes up, you're able to get your funds out. Also, if we have a property sell earlier than expected, we can roll over the investment into a new project so your money keeps working at that high rate of return at all times. How are you protected as a private lender? Well, investors receive a note and a deed of trust. The promissory note is a simple document that has the investment amount, term, and interest rate. The deed of trust is the document that gets recorded with the county as a lien against the property. This is what secures your investment and protects you in case of default. Also, you're going to be named as additionally insured on the insurance policy. In case the house burns down, you're protected there as well. You'll also be named on the title policy in case there's any issues that come up down the line from that. Every house we buy has built-in equity day one. We are constantly scouring the market looking for deals. We pick up foreclosures, short sales, probates, and other distressed sales. If we can't pick it up at 50% or less of market value, we don't buy it. So in the scenario where the investor doesn't pay, you take back the property and you get the equity. So you'd actually end up getting more money than you would have just by making it from the interest. So you're well protected. Another question we get is, do we pool investors' money? And the answer is absolutely not. Every loan, every deal stands on its own. There might be more than one private lender per property. Say if we have two lenders with smaller amounts to loan. We might have one loan the purchase amount and another loan the rehab amount, but they are two separate loans, each with their own deed of trust. And the combined loan to value will never exceed 75%. So that way, everybody's protected. Am I concerned about market conditions and not being able to sell a house? The answer is no, because we deal with a very motivated buyer pool and they are not shopping price. We have a very solid marketing strategy and a pool of buyers built up, so we're able to get properties occupied very quickly, which reduces our holding costs and overall risk on these deals. Since we buy at such huge discounts, we have plenty of equity to cover any potential downturns in the market. We could drop the price significantly and still be able to cash out our lenders. Another layer of protection is the funds are never sent directly to me, the investor. We close all deals with a third-party title company or real estate attorney. We want everybody protected on paper because at the end of the day, the only thing that matters is what's on paper. So you will wire funds or drop off a cashier's check directly to the title company, and the title company makes sure all liens on the property are paid off and the title is clear and that all paperwork is handled correctly. Another question I receive is, are there any costs or fees with this sort of transaction? And the answer is no. The amount you send is the amount you earn interest on. There's no fees that come off the top like if you were investing in the stock market. So you're going to get all your principal back along with the interest at the end of the project. Here are the documents involved in the deal. Promissory note is a document that shows X amount of money is owed from one party to another. It shows the amount invested, the time period, and the interest rate. The deed of trust is the document that gets recorded with the county as a lien against the property and secures the private lender's investment into the property. The property can't be sold or refinanced without paying the private lender back first. You as the private lender are also named on the insurance policy and title policy. You will also receive a comparative market analysis, shows what homes are selling for in that neighborhood, so you know the property is not being over-leveraged. Our typical minimum investment is around $40,000, and we can put several hundred K up to a couple million to work. Sometimes we can get smaller deals, but they don't come up as much in the neighborhoods we like. We can find ways to place $25K, it's just going to take a bit longer to put a smaller amount of money like that to work, or we'll just use it for rehabbing a property like I mentioned earlier. We have several investors with over $100,000 invested, and we just put them into several projects at one time. So if that's your case, just let us know. So if you're interested in moving forward, where do we go from here? First step is letting us know how much capital you're looking to get working for you. You give us a verbal pledge. We don't ask you to sign anything in blood, but it takes us some time and coordination to put these deals together. So it's based off trust, and we ask that if you give us a verbal pledge, you're going to follow through. Then we'll go out and find a deal for you and prepare a package for your approval, and then we schedule closing with the title company. It's really that simple. If this is something that interests you, you can reach me here. Thanks for joining me today, wherever you're watching. Hopefully this has shed some light on the world of private lending. And if you have any questions at all, please feel free to reach out to me.